Hello and welcome. Today is Sunday, February the 14th, 2016. This is Paul Sandhu coming to you with another episode of Wake Up and Live Radio. And to help us all wake up out of our slumber and to get some information that is real and pertinent, I have joining me today Mr. Jim Willie from sunny Costa Rica. Jim is the editor of the Hat Trick Letter, which is found on his website, goldenjackass.com. And since Jim is a frequent guest on this program, it's no need to do a long-winded introduction. So hello and welcome, Jim.
Oh, hi, Paul. It's good to be back. I keep saying there are a lot of things happening, and this is the quickening. This is the climax approaching, beginning, going into middle levels. It's happening now. We saw the fake Fed hike a while back in right before Christmas, and everything is falling apart in the new year. Just tremendous declines all over the place. And debt downgrades. The Italian stock market is down 24%.
Oh, it's that much? I didn't know that.
In just since the new year began. I mean, we got a lot of things happening, and it looks to me like we've got some, global pacts, global new deals being struck, and very hard to get concrete information on it all. But I do what I can. I always got my ears open, and I tap on certain people's doors for good information when they have it, and I've been getting some, but it's all incomplete. I do what I can, and I hope that's enough. But we got a number of topics here. We're probably not going to get into a lot of depth on each one, but I like to just drop some good points on each of several hot spots. So what do you say we get going?
Let's get going with, we've narrowed down like 7 or 8 topics. So let's begin with the number one hotspot, which is, of course, Deutsche Bank. And this is something you sent out a little alert a couple of weeks ago about the collapse, or let's say potential collapse of Deutsche Bank and its possible contagion. So could you please speak to that?
Yeah, in the January newsletter for the Hat Trick Letter, I pointed out that their credit default swap, talking about Deutsche Bank, was around 90 for a few months. I think that means 90 basis points, which means you pay 0.9% to get an insurance policy on Deutsche Bank's corporate bond. That's what it is, and I believe it's the 5-year. I'm not sure. Usually there's a 5-year. We quote bond yields a lot for the 10-year, but the insurance seems to go on the 5-year, and I don't know why. Anyway, the important thing is to look at the credit default swap, often known as the CDS. So the CDS for Deutsche Bank was 90 in December. I reported it as jumping to 120 in January. Now it's 260. It doubled or more since mid-January. This is a death signal. This is near total collapse of the Deutsche Bank company. It's not just, you can't just look at their falling stock. The stock's down like 80% in the last several months. 80%. This is a death signal. Confirmed a stock decline, which is the first. Stock investors are the first ones in line to get wiped out. Down the line, I mean, there's a big progression. Then you go to preferred stock, and then you go to the bonds, and then the senior bond, and then it gets very confusing to me at times. But I just saw superimposed 2 stock charts, and the Lehman Brothers had a different year on it. They altered the time sequence, and the Deutsche Bank was recent. And they're almost exactly the same in their path down. A little bit different from a year ago, but since the decline in the last 3 months, they look very similar. And I've noticed that there's something very weird going on with respect to Venezuela.
Yes, Venezuela is a very in a very calamitous, is in a very dire straits from what I can read.
So why are they talking with Deutsche Bank about a gold swap? Oh, so I guess this has got another little angle tying in to the corrupt vat that I call Deutsche Bank. My guess, okay, this was just tossed out by Euro Raj, my colleague. He's a really smart guy. Gosh, he comes up with these angles, and then it becomes more reinforced as time comes on. But he suspects, this is just a left field comment, but he suspects that maybe Deutsche Bank is being pressured by the Saudis to repatriate some of the Saudi gold. So Deutsche Bank is short gold, and they're looking to do a gold swap with Venezuela to obtain gold. So it's just a possibility. We'll look into it more, see if we get any more hints, but it's very hard to get confirming information. Okay, back in 2013, I was told that Deutsche Bank was going to break up into 7 entities, or that would be the smartest outcome and path to pursue. But I don't think that's going to happen, and I don't think it has happened for a very big reason. There's too much scum, corruption, and interwoven obligations regarding their derivatives. And for people who don't know much about the history of Deutsche Bank, there was a bank back in the 1990s. It was called Bankers Trust. And Bankers Trust had a nickname when it was a Wall Street phenomenon entity. Bankers Trust was known as the Fed's Bank. In other words, they were the derivative house. That's where all the heavy leverage derivatives and insurance contracts and linkage contracts, like, say, from oil to the dollar, other linkage contracts, like, say, to the euro and to the dollar. In 1998, Bankers Trust was acquired by Deutsche Bank, and I heard that it was really against their will. They didn't want it. But the United States and the Wall Street scum corps, the corrupt boys, they wanted a derivative shop in Europe, outside the regulatory purview of Wall Street. So Deutsche Bank decided, well, we'll do it. And they became the Western Europe derivative shop, tied closely with London and New York. And it's all breaking now. So the derivative shop is breaking, and it really signals a lot of chaos in the markets. I believe Deutsche Bank is going to be the major bank sector fuse. I think this is where it's not going to be one fuse. I've got some theories that Portugal and Italy are going to be other fuses. We'll talk about them later. But Deutsche Bank could become the banker cabal fuse.
So,
whereas
you had compared it to Lehman Brothers. So would it be on a similar scale, or do you expect it to be something more, on
5 times bigger?
Oh, wow. So
5 to 10 times bigger. Lehman Brothers was basically, in my book, a mortgage finance disaster zone.
Right.
Deutsche Bank is a banking global sector disaster zone.
Okay, that makes sense.
Deutsche Bank is going to be tied in. Deutsche Bank will be tied in, Dash, with say, emerging market debt, with Portuguese sovereign debt, with criminal Russian dealings with London. A lot of different things. The J.P. Morgan London Whale had a Deutsche Bank connection. Deutsche Bank is systemic. Lehman Brothers was mortgage finance.
So you're saying that the Deutsche Bank tentacles are far more reaching than Lehman Brothers were, so it makes sense that their contagion would spread a lot further.
Yeah, just look at it as Deutsche Bank's tentacles extend to every part of the banking sector.
So is that one of the, well, let's move to our next topic then. We leave it there and keep an eye on what's going to go on. And even the mainstream now is talking, even on Reuters today, I saw an article about Deutsche Bank and, what it wasn't a very complimentary article, let's put it that way. So it's out in the mainstream now. We'll definitely keep an eye on that and see.
They're always good. The mainstream is always good to catch the story when it's about 4 to 8 months old.
Exactly.
That's why the hat-trick letter is a worthwhile thing to purchase, because I've been talking about Deutsche Bank for several months.
Oh, yes. Even in my program, you have discussed this many times in the past. So you've been, way ahead of the curve, let's say, on the mainstream, as you usually are. And that's why I love talking to you. Stock market free fall and the bond market black hole. Shall we go down that hole?
Yeah. It's a bit of a synergist. What do you call it? There's synergy. There's synergy between the U.S. stock market and the U.S. Treasury bond market. Notice that when you see a bond rally and the yields go down, like below 1.9% in the last few weeks, the stock market was the reason why, or a reason why. Money went out of stocks, went into bonds.
Right.
And I got a bunch of questions, and one of them was put so well from a client yesterday. Maybe it was just a follower. I don't. When I get a message, I don't always check to see if he's a client in my base. I tend to just answer and move on because there are too many of them. But I think this fellow put it very well. He said, "Is the bond rally a fraud?" And I said, "No, it's a black hole. It's not a fraud for people to invest in a bond market that pays a shrinking yield. It's just a bad idea. It signals that there aren't very many safe places left in the world. The U.S. Treasury bond market is attracting money from across the world." I like to give the example of Brazil. A year ago, their currency had declined. Okay, it's declined a lot more since, but a year ago it had declined. And there were a lot of investors in Brazil who realized, we're losing money here, so maybe it'd be a good idea to climb into the dollar, and we can buy a treasury bond here and benefit from the rally there, because as the yields decline, the value of the bond goes up. And when all this is happening, the Brazilian real is falling. So there's your feedback loop. And I've noticed that an amazing phenomenon among economists in the West, primarily the United States and London that I listen to, and there are plenty of English-speaking economists in Western Europe too, even in Hong Kong for that matter, and Australia. But the point is, they don't ever talk about feedback loops. So the Brazilians realized their currency went down, and their reaction was to hunker down into treasury bonds, which only made it worse. It's the feedback loop. Okay, so you've got a lot of emerging market money that's in trouble now. Their economies are bad. Their income is way down from commodities, down 40%. Their debt is ballooned up in their burdens because of the currency decline. They're hunkering down in treasury bonds. And mutual funds in the United States are realizing that their stocks are at risk, so they're moving into treasury bonds. And Europeans are realizing their euro currency was down in the last year by, 10% or more, so they hunker down in treasury bonds. Now, since when are we in a normal cycle? I remember back in the 70s, 80s, and 90s, more like 80s and 90s, every time there was a big treasury bond rally, it signaled that, we're going to make cheaper the cost of capital. We're going to encourage capital expenditures, namely business investments. And we're going to get this thing kick-started from the low rates. Well, that's what we thought was going to happen, not me. That's what many thought was going to happen in 2007 and 8, 2005, 6, and 7 in particular. But the investment dash was in the emerging market nations. It
Right.
wasn't in the United States and Canada, except for the energy sector. So the cheaper rate as a typical signal for Treasury bonds is not forecasting a recovery. It's forecasting a systemic breakdown and economic collapse. Okay, that's the black hole. So it's attracting money around the world, and it's also attracting money into the Fed's balance sheet. They've got $4.5 trillion, $4.6 trillion on their balance sheet. So do you think maybe the Fed is going to encourage a bond rally? Yeah, it makes their own balance sheet go up in value. Oh my gosh. How about negative interest rates? You think that'll lead some money out of the banking sector and into treasuries? Yes. It's like a spur in the side of the treasury bond horse's side to accelerate the vortex of the black hole. Okay, this is not a good sign. Also, the protected fortress of derivatives. It benefits from a bond rally because it makes, if it's done in a stable way without big swings,
Right.
like, next month it's 1.7, this month it's 1.8, 2 months from now it's 1.6. In March it's beginning to look like it's going to get down to 1.5, which is my target. Well, if it's in a nice steady way, that's good for derivatives. It keeps them very nicely suspended. And I believe one of the major stories not well told from the Fed's fake December rate hike was that they've made this tower narrower and higher with greater leverage. I just did a calculation. The Fed's balance sheet is now leveraged at 114 to 1. That's not good.
So
That's not stable. So if there's any rocky wind
right.
slamming against the treasuries, like suppose, looks like everything's going to shit, and the treasury bonds might be in trouble with the dollar, if we get a big rally, other way around, if we get a big decline in the bonds, and the bond yields go up to, say, 2.0 suddenly, well, that really is a big disturbance to the high tower. I call it the Tower of Babel, Babel Bobble. That's the tall, narrow tower of treasury bonds. It can't stand that. It can't stand that at all. So I think Wall Street has been putting their option puts in place in the last couple months, probably in December and November, getting them all in place so they can profit heavily. So if mutual funds and people's private large accounts suffer, who benefits? Wall Street. So you think maybe Wall Street will put their option puts in there on the S&P and then maybe push it down? Yeah, clearly. With the Federal Reserve coordinating it all.
Right. So we can kiss all the pension funds goodbye and...
No, I think they're just going to suffer losses, but don't worry. They're going to have a nice opportunity, I think, sometime in the next year, a lot of them, maybe one by one, to follow what happened about a year and a half ago. Obama announced a special U.S. Treasury bond for U.S. government employee pensions.
Oh, yes.
Okay, and I think it's going to go hand in hand. We're going to see a lot of money forced, like 401ks and IRAs first. They're going to be forced into treasury bonds. They're calling them more limited options. Yeah, more limited options. You must invest in the fascist government bonds.
They call Myra. Yeah, I remember now. Yeah.
So anyway, I think that's how it's going to go hand in hand with the new Scheist dollar. The new dollar is going to come in, and they're going to immediately have a challenge of covering the deficit of $1 trillion a year, which I forecast back in 2008. I said we're going to have $1 trillion deficit every year in the United States every year, and that's exactly what we've had for 7 consecutive years. They're going to have to finance it, and I think they're going to finance it with forced Treasury bonds, special U.S. Treasury bonds.
Okay, to conclude this topic, then you expect the stock market to continue to decline and the bond rally to continue.
Yeah, I think exactly. We're going to see another 20% decline in the stock market. It's going to scare the crapola out of the American people. I expect to get a phone call from my sister. She only makes a phone call in a panicky way when the stock market is down and her big IRA is in jeopardy, and then she ignores all my advice. But the beneficiary of that will be the black hole of the Treasury bond market, which will be encouraged by Wall Street, encouraged by the Fed, encouraged by the bond carry trade. Okay, if they short the zero-cost money bond and they go long on the Treasury, their carry trade makes money with 50 to 1 or 30 to 1 leverage, depending on whether it's OTC bond futures or whether it's standard COMEX bond futures. They're going to encourage it and benefit. So, there are a lot of motives for continuing this thing. Remember back in the late 80s and early 90s, Greenspan said we're a financial engineering nation now. Financial sector is dominant. Yeah, and this is its death spiral.
Okay, well, I guess that my question was then how long can this spiral continue? And I think that leads us into our next topic, which is the isolation of what you call the king dollar and its ultimate demise.
Yeah, there are a lot of factors going on here that indicate the king dollar is, it's not just in trouble. It's being abandoned. It's being left out in the cold now. We've got Bill Holter has done a great job. It's not just metaphors. It's really ample description of what he calls the dollar margin call. All right, let's keep this micro for a minute here, quickly. Let's suppose there's a lot of shorted shares of IBM. And then suddenly there's a lot of demand for whatever reason for the IBM stock. And there's not enough out there to cover properly. And you get a squeeze.
Right.
So there's just a rush in there. And people who know a lot about stock pricing, it's set at the margin. Okay, where's the demand? Where's the supply? At the margin. So it could pop up 20%, even though the fundamentals don't warrant a 20% rise. That's what's happening on a macro level with the dollar. Because when debts come due, say let's just say there's a small bond in Bangladesh or Brazil, and they need to cover it. Well, they have to do so with a lot of new fresh dollars. So there's some dollar swap demand in there. And it's all kind of artificial. But at the margin, there's tremendous amount of demand for the dollar to cover these debts. And at the same time, you've got the big petrodollar machinery, which is enormous contracts. Just think of a $100 billion contract, and there are lots and lots of them spaced over time. $100 billion contract coming due, and a big French bank needs the dollars to liquidate it. So again, there's dollar demand. It's not from economic, and the U.S. government is coming out and saying that the dollar exchange rate rise is due to the fact that the United States has the strongest economy. Could not be further from the truth. It's from all the financial engineering coming unraveled. Bill Holter calls it a dollar margin call. And at the same time, he points out the irony that we've had 5 years of QE or 4 years of QE with unsterilized bond purchasing. Pure hyperinflation covering the U.S. government debt and covering Wall Street bonds in perhaps the biggest backroom Wall Street bailout. That's what QE is. And what does it produce but a dollar shortage? Okay, why is that? Because QE destroys capital, wrecks economies, raises the cost structure, puts business segments out, kills them. So where does the money go from all that capital? Well, it goes into the treasury bonds, into safekeeping. That's part of the black hole. But Bill Holter has described this as a dollar global margin call amidst a dollar shortage, creating a massive short squeeze. We're seeing credit dry up around the world. And the central banks are managing the process by making sure there's sufficient cash here and there to cover the debts. And what's coming next, and it's already beginning to show itself, is between $5 and $8 trillion of emerging market debt that's going bad. There's not a hope in hell that they're going to be able to pay it off. There's not a hope in hell that they're going to be able to even continue the debt service. So this is very messy. And at the same time, this isolation of the king dollar, it's taking on new forms. We see the Russians just this week announcing that they'll accept RMB currency for oil sales to China. So China and Russia are the main leaders for the movement to get oil trade out of the dollar in the payments. That's exactly what the petrodollar was. So we're seeing the end stages of the petrodollar. And I think a big thing coming up, real big, is going to be when the Saudis slap Washington across the face and say, we will accept Chinese RMB currency for our oil sales to China as well. Because Russia is trying to coordinate the policy with the Gulf Emirate nations right now.
Now, Jim, you just mentioned that these emerging markets, there's no chance that they'll be able to pay these debts. What we have seen in the past is whenever debts come due, the banksters, they are not very forgiving. Case in point being Greece. So they're not just going to walk away from it. How do you think that's going to be managed?
The debt for what? I missed
the emerging market debt. When you said that there's no chance that they will be able to pay it, then what?
It means the European and London banks and New York banks are going to have to write down the debt. They're going to have to write them as losses.
In the past, they've been very reluctant to do that. Like I said, with Greece, Argentina, wherever it is, they put all their all kinds of pressure that that it doesn't get written off. So you expect that they're just gonna silently let it happen?
No, it's not going to be silent. It's going to be like someone breaking down the door. It's a combination of two things now that result in breaking down the door. The emerging market debt is going to default, and the oil sector debt is going to default.
So that means
it's too much. Right. It's too much. Yeah, okay. They've been patching it over with what they call bridge loans for debt service. In other words, a company like Baker Hughes might have a payment due on February 22. And they've got to come up with $1.6 billion on a debt payment. Or they default on a bond. Or they default on a commercial loan. So a bank steps in and says, well, we'll lend you the $1.6 billion because we already have $5.5 billion with you. It's called a bridge loan.
Right.
It covers the debt service. Well, that's going to stop. It's already stopping. The combination of the oil sector and emerging market debt is going to knock down the door. And we're going to see, I don't know, I've got a list of banks. We're going to get to that in a future point here. So let's leave that point alone. But
okay,
there are pressures, and it's not going to be avoidable anymore.
That's good.
There's too many.
That was my question. So what you're spelling out is like the whole house of cards is ready to tumble. And we will get to that soon. Let's move on to our next Okay, petrodollar, you said yes, Saudi Arabia is going to start accepting renminbi as Russia already has. So, we've discussed that in the past that the petrodollar is going to be extinct, and it already is to a great degree, and it is hastening the quickening, like you put it.
Well, it's like there's 6 or 7 steps, Dash,
Right.
for the dismantling of the petrodollar de facto standard that replaced the gold standard. And the gold standard fell in 71. The petro standard came into picture in the 73. And I think that out of the 7 steps, we've probably finished about 5 or 6.
Okay, so yeah, so it's in the very late stages then.
Yes.
Okay, good. Iran is connected to all this as well, and Iran is suddenly, being welcomed with open arms by just about everybody. So Iran has been invited to. You think, or you're conjecturing, I think, that Iran has been invited to become, or will be invited to become, the third leg in the Eurasian trade zone, which is a Eurasian Economic Union that is being formed, I guess something like the EU.
Yeah, well, I don't know that it's conjecture. It's happening right now. You don't read much about in the U.S. press, but there are 3 things that are happening that indicate that Iran is going to be a more viable member in the global economic community, put it that way. The first is that the nuclear deal is done. Okay, and it's been signed off. Has lots of ramifications, like $100 billion of frozen Iranian money in European banks. The sanctions are over, and Iran is starting to get their money back. Okay, the second thing is China just made, I think it's 17 separate agreements on economic and technological cooperation. China and Iran are now making enormous contracts. And the third one is something that's been going on for 10 to 15 years. Very significant, maybe not in dollar amount, volume, but very significant Russian arms deals with Iran. In addition to, say, nuclear refinement equipment. A lot of different things with Russia. Sunburn missiles to defend the Persian Gulf, their side of the Persian Gulf. So I wouldn't call it conjecture. I would say this is more like a huge billboard on the left side and another huge billboard on the right side. So Iran's going to recover $100 billion. Iran is a very low-cost oil producer at about $17 a barrel. Can you say continued profit?
Yes.
Not for U.S. and Canada. Not for the North Sea, the Brits, and the British and the Norwegians. Okay, so they're still not as low as the Saudis and UAE, United Arab Emirates. But Russia is right around there. Russia's very low-cost producers. Okay, something else is happening with Iran. Another big billboard message. They're getting bolder. They just had the sanctions reduced and as part of the Iran nuclear deal, which the U.S. was a loud partner at the table, but a minor figure in power. That's a very important point. The Iran nuclear talks were done with German leadership and Russian leadership and Chinese leadership. It was the United Nations Security Council plus Germany that led that movement. And the U.S. dragged its feet all the way, making loud, clamorous claims like, well, we must have this condition met. We must have that condition met. And the rest of the world was saying, yeah, we'll take care of that. Just sit down and shut up. It was rammed down the U.S. throat. Iran is now getting bolder, saying we want all our oil sales in the euro currency, and furthermore, all our past oil obligations, namely from oil sales not yet paid in the last 2 years.
Right.
We want them in euro currency also. what I'm hearing, Raj nailed this down. He said what it seems like, and what I'm reading and what the evidence is pointing to, is that the contracts are still written in the dollar,
Right.
but the payments are all done in the euro. Okay, so couple that with a big meeting in late January with Chinese President Xi Jinping and his Iranian counterpart Hassan Rouhani. They signed 17 agreements and announced cooperation toward the Chinese-led One Belt, One Road. It's essentially the main steel beam of the Eurasian Economic Union, what I have been calling the Eurasian Trade Zone. Eurasian Trade Zone is officially called the Eurasian Economic Union, the EEU.
Right.
Okay. So the last thing I want to say on this topic is that Russia is leading a very unusual movement, but a necessary movement. If the petrodollar is almost gone, like 5 steps of the 7 done, loosely speaking, then what will pick up the mantle and run with it for setting the oil price globally? Well, it's kind of like a Mad Max zone now. You don't get that image by looking at the press. You get that image by, listening to guys like me who try to put, a movie metaphor in there.
Right.
There's no order. So Russia is now doing something with the Saudis and UAE, trying to get some price mechanisms in order. The Russians are now saying that the current mechanisms just don't work. Okay, so it's an invitation to the Gulf Emirates and OPEC. OPEC is more than the Gulf Emirates. The non-Arab elements to OPEC cover nations like Nigeria, Angola, Mexico, and Venezuela,
Right.
and Indonesia. Okay, so they're trying to get some organization. The invitation went out to the OPEC to come up with a unified voice so that they could meet with the Russians. I think it was Russia's way of saying, we don't expect a damn thing from you at OPEC because you can't even agree on the color of your name tags or the lunch menu. So we're inviting the Saudis, the Russians said, Saudis and UAE, to work together to come up with an oil pricing mechanism. And what I think is going to come is some kind of a pricing mechanism in Chinese currency, RMB. So we're going to get gold and oil priced in Chinese currency. This is a move away from dollar-based commodity pricing.
So, yes, that's a move that's been something that's been ongoing for a while, and of course, to that end, nations have signed or regions have signed, many bilateral, multilateral deals that completely bypass the dollar, and I suppose for a lot of the emerging or the developing nations, it's a good thing because the dollar has cost them a great deal in the past. So I suppose they are not exactly trying to fight this move. They are actively encouraging it, as you are pointing out.
Well, they're doing so in an active way, but reluctantly because they've got a lot of commitments with treasury bonds. Okay, just for instance, the Saudis, they might have between $3 and $5 trillion worth of treasury bonds. UAE has somewhere around $1 trillion in treasury bonds. So what they're doing is working to get an effective dynamic for oil pricing, while at the same time working feverishly to salvage their 30 to 40 years of reserves, otherwise known as their oil surplus savings account. Very complicated, Dash.
Yes, I bet it is. And yeah, it's not as simple a process as, we have perhaps, or at least I thought maybe it would be simpler than that, but now as you point out the intricacies involved, it is a complex process, but at the same time, 5 or 6 steps have already been taken, so it is being done no matter how complex it is.
It has to be done.
Yeah.
If you don't do it, then the global economy is going to collapse. It's already collapsing. So what they're trying to do is slow the collapse. And I think when we hit a climax, like the black hole of the treasury bond is so great, we're moving quickly to a gold standard. And I've been saying this a lot. First in trade, then in banking reserves, and finally in currencies. Now that's a conclusion of the petrodollar death.
Right. I guess something viable has to take its place, and I guess there's nothing better than gold, and we would all welcome that move.
We've tried everything else. Now It's time to do the right thing.
Right. Now, this is something we've discussed in the past that's related to this topic, which is, of course, is the devastating impact that these low oil prices, that the huge drop in oil price is having on the banking sector, among other things, and also on nations like Venezuela, for example. So that's a topic I think worth revisiting, which is the oil price impact is now in full and devastating display.
Yeah, I just marked down 4 countries that are having tremendous distress and strain from the lack of oil income. I left out Norway. Norway's got some big problems now. They're the biggest of the North Sea producers, but boy, is that ever winding down. Oh, my goodness. They're some of the best engineers in Norway for setting up platforms and doing extraction. And they're having a lot of trouble now. But they've got a huge savings account of something like $800 billion. They call it their pension fund. But there's some other nations that are in deep distress. Venezuela is on the verge of a bond default. And the oil price being lower has resulted in less revenues. They've got a late February bond payment that's over $1 billion. And that is the basis of their move toward a gold swap with Deutsche Bank. So it could be that Deutsche Bank gets its butt saved on a Saudi demand for repatriated gold, while at the same time Venezuela buys time by forfeiting some of their gold. They've got way too much Chavez and now Maduro, who's just nothing but a Chavez crony. They ran down their reserves account with all kinds of sweetheart loans to their cronies that'll never be paid back, offshore investments that'll never pay off, and now they're out of cash and are facing bond default. And if they get through the February, the Venezuelan bunch that are crony socialist idiots and crooks, they've wasted their national Venezuelan state oil firm. They've wasted it. They've not invested in it. If they get past February, they've got September and October giant payments also. They're going to default sometime this year. Okay, then there's Nigeria. Nigeria and Azerbaijan, that's a Western Asian country, the Caspian region, they've just applied for a World Bank loan because their oil revenue's way down.
Right.
And then you've got the Saudis. The Saudis are trying to float bonds, and it's not working. So they're selling treasuries, and I think what they've done is they worked out a deal with the U.S. government. We've been loyal to you for 30 or 40 years. Now we need your help. So what they're doing is they're getting some exchange stabilization fund, largesse, and getting some redemption on their $3 to $5 trillion in treasury bonds. Well, the Saudis are doing other stupid things like waging war in Yemen, supplying and waging war with ISIS in Syria. So the entire Gulf region is seeing a real pinch from the oil price. They're plugging deficits by selling reserves. And what's the major item in their reserves in the Gulf Emirates? It's treasury bonds.
Right.
That it's the basis of the petrodollar. It's Kissinger called it the oil surplus recycle. Okay, petro surplus recycle, and the agreement was they will do it in the treasury bonds. So oil purchases would be done by nations of the world in dollars, and the surpluses by the Gulf Emirate nations would be kept in dollars, and therefore no sales outside the dollar, and the dollar became the de facto standard. That is what the petrodollar is. But you got other areas like, oh gosh, hardly a week passes without some message from a client in Alberta, in Western Canada.
Yes.
They're having property value declines. I got a fellow cancel from the Hattrick letter 2 weeks ago, and he said, I'm sorry to say, but my business is pretty much wrecked. I'm in Calgary, and there are offices now that are empty all over the city, and now there's property decline. Okay, you've got projects that are shutting down in Alberta. It's the oil sands area, and it's a lot more than that. Extending this theme, Standard & Poor issued 10 energy company debt downgrades in the last couple weeks. This is big news. Why would they issue a debt downgrade? Because they know the banks can't continue with the bridge loans. Because the banks are going to have to let go their big energy clients and allow the debts to go bad. They can't. To me, it means an admission the oil price is not coming back. So the oil hedges are expiring. I mentioned this in November and December. I think in every interview I did over the Christmas holidays, and there were, I think, 4, every interview I mentioned that in January, February, March, the oil hedges would come off, which means that the big energy companies would not have the buffer of the oil hedges that would make them virtually able to sell at $90 or $85, for instance. Those are expiring, and now they must sell at $30 or $25 or whatever the current price is. It bounces around a lot. So it means no support for the energy firms, no support for the drillers. The drillers are also in dire straits. They're failing. So the effect on the big banks is coming. The big banks in the U.S., Canadian banks. I just heard that from a Canadian client that I think it's CIBC.
Mm-hmm.
They're going to be announcing some very large energy sector losses.
That wouldn't be surprising at all.
No, but what it's going to do is it's going to threaten the whole bank toward failure. They're that big. The failure, the bond losses are that big. Something else happened, Desh. Last point on this. Very interesting phenomenon took place about 2 weeks ago. The Fed governor for the Dallas region, Texas, urged, this leaked out. He didn't have a press conference to say this. It leaked out in a manner of, well, there's a press report that a big Wall Street bank was present at a meeting, and the meeting had to do with some banks that were heavily exposed with the energy sector in Texas, Louisiana, Oklahoma region, and the Fed governor had a meeting in secrecy to urge the banks not to call in the debts and to default on them. And instead, extend time and, very important, don't mark to market the energy portfolio. Suspend accounting.
Like they did with the mortgage bonds back in 07, 08.
Right. Suspend the subprime mortgage bond valuation.
Right.
Don't admit that there are 5 dead banks, including J.P. Morgan and Goldman Sachs. So that's why they killed Lehman Brothers to survive themselves. But the other part here is that when they suspend the accounting rules, they told the big banks, work with these energy companies to try to facilitate asset sales, to recover money in order to make good on some of the loans. And here's where it gets really ugly. The asset sales are now 70% down. How do you recover when you see a 70% loss on your asset? So they're really not buying much time. But the big important point is that the Federal Reserve, in their Dallas office, if you will, urged the banks to suspend proper accounting. It's a death sentence. It's a signal. These banks are dead. So we're getting all kinds of forces from different sides against the big banks. You know, I mentioned the emerging market debt, okay?
Right.
But we've also got standard economic distress apart from the energy sector. So this is the great unraveling. It's everywhere you look. We're having a global economic collapse.
Well,
and it's being led by the global financial collapse. Right, and you wouldn't read about it in the press. Right?
Exactly. Okay, well.
You read about it in the Hattrick Letter, which, you know, is not a gloom and doom newsletter. It's reality. It's preparation for events that are right in front of your face, not well reported.
I think back in December when I was talking with you, November, December, that this was one of the big topics we covered was the linkage between the energy sector and the big banks. And now I can see that I'm in Canada and we read about this and what's happening in Alberta. And yes, it's definitely happening. It is something that is undeniable. So again, my hat off to you, no pun intended, that, you know, your call was very, very good on this subject. Well, there are other problems that are also, this is just one of the problems, like you say, then therefore it makes sense that there is a worldwide economic collapse that is ongoing. Pigs, you know, we've suddenly the pigs are back in the news. I was reading just today about how these, Greek farmers are rioting and they're burning things down in Athens once again. You know, Greece has been out of the news. But in addition to Greece, you also have information on Portugal and Italy. Like you mentioned, Italy's stock market is down 25%. So how are the pigs related to all that is going on out there?
For the last 2 years, the Euro Central Bank has been the buyer of last resort for the sovereign debt from the pigs nations, referring to Portugal, Italy, even Ireland, Greece, and Spain. Something has happened since January. I firmly believe an agreement was made by numerous nations coordinating with the Chinese that enough's enough. We're going to have to let this thing go. We're going to have to move on to the real solution. And to me, the real solution has two parts. The banks, big banks are liquidated, and we move to the gold standard. Well, I've heard people really stupidly say to me, but Jim, we've tried just about everything. No, we haven't. We've tried everything but the solution. Liquidate the big banks and move to the gold standard. Oh, yeah, but that's so chaotic. Right, and it's more chaotic because we've delayed so long. All right, something has happened. I think the Euro Central Bank has withdrawn its support. And you're seeing it in the Portugal sovereign bond, the Portugal government bond. It's now sitting, their 10-year bond yield is now suddenly 3.6% above the German Bund. Now, they use the German Bund in Europe as the benchmark. You know, where's your bond? What's your bond doing? Well, how is it behaving relative to the German Bund?
Right.
I don't have the exact figure in front of me, but I believe the spread was around 1.5% or so for the Portuguese bond, and now it's 3.6. It's spiked in January and February. Well, what does that mean? It means that they're in deep, deep trouble. It means that they might not be able to continue the charade. It means that we might see a giant bailout of Portugal or a default. Okay? So it's a likely fuse. Let's just say Portugal defaults. What happens? Well, 3 or 4 big banks in Western Europe, probably Spanish banks and French banks, fail. Okay? So that's the impact of what's going on with the Portuguese government debt, their government bond. And I don't think the Euro Central Bank is going to come in there and say, we'll fix this, because they have before and nothing got fixed. The key point is that when the Fed or Bank of England or Euro Central Bank fixes something, they don't fix anything. They buy a little time and guarantee that it'll have to be fixed in a bigger way down the road. So I think the Euro Central Bank and the IMF might say, we can't fix this. Okay, the second signal. Italy's stock market is down 24% since the beginning of the year. Are we still okay on the signal? Just checking.
Yes, you're fine.
Okay, I heard a little noise there. I thought maybe okay, so the Italian stock market is down 24% since the beginning of the year. It's not done in a vacuum. At the same time, and I reported on this in the January Hat Trick letter a month ago, that there are a few Italian banks with severe problems with their bonds. And there's a bank run at a few banks because they've had some problems with their bonds, and they set up some new bonds in the last several months, and they let it be known that they're the first ones to take losses in the event of big problems and any kind of a bail-in of private accounts. So there's a flood big outflux of these Italian bank corporate bonds. We're just working closer and closer. I asked The Voice, do you think this Portugal spike in their bond, way above the German Bund, do you think this means that Portugal might be the fuse that lights the explosion for Western European banks? And he said, no, I think it'll be Italy. It's so much bigger. Italy has I think it's $1 trillion worth of bad debt. And what did Greece have? 250?
Right.
So Italy is 5 times bigger than Greece. And now their banks are already showing distress, with some of them defaulting and others on the verge of default, getting patch loans, as I refer to them, patch and bridge loans. So Italy is going to bust. When you combine stock market decline with bond market distress, all you need is lack of liquidity, and you've got the bankruptcy and the bank failures. In order to have the illiquidity, the liquidity problem as the last ingredient for a bank failure, all you need is the Euro Central Bank and the IMF saying, we can't handle this. So, here are my candidates for the big bank failures coming. Deutsche Bank, Societe Generale in France, and Barclays of England. If Barclays goes, all hell will break loose, because they're the biggest bank involved with LIBOR. That's the right. London interbank overnight rate setting. The interest rate market will just go to hell if Barclays bites the dust. But if you're not just concerned with the big banks, the biggest of the banks, you might look to the other banks that could maybe cause problems for these three. And that could be Santander out of Spain, and Banca Intesa out of Italy. They're on the ropes too. So it could be a little Italian bank causing a bigger Italian bank causing some from France, Germany, and England going down. There's so many possibilities and scenarios for this bust.
When we have banks like Deutsche, Societe Generale, etc., I mean, this is not going to happen in isolation. This would pretty much affect all of the European banking sector, and then, of course, it will reach across into this side of the Atlantic as well. So, I mean, this definitely is on the surface. It will seem that it would be definitely way, way, way bigger than Lehman Brothers. So, again, this is one more of those triggers. So there seems like there are so many triggers that can set this thing off, that so many fuses that can be lit to get this economic collapse really off to another level altogether this year. That
I agree. And here's a phenomenon that makes this contagion. You're referring to contagion. Right. If it happens to one or two banks, it's going to happen to many.
Yes.
And they stemmed the contagion in 2008.
Yes, they did.
They're not going to be able to this time, and here's why. The big banks lashed themselves together. They said, look, we're going to have to spread these derivative risks and all the support mechanisms. We're going to have to spread it around to all the major banks. So when any one goes down, they're all going to go down. I think this is the year we have the extreme forces. I'm not saying it's going to happen, but extreme forces for the major banks together to go down. And I think it's going to force them into the gold standard, Dash. This is how it comes. The big banks are going to say, we're all in deep, deep trouble. Let's all make a deal to quietly buy a lot of gold. And maybe the Chinese will help them a little bit. And after the Western banks buy into a lot of gold, they're going to double the gold price and recapitalize the banks.
Well, that
it's
would
a
be
method.
One way to do it.
Pardon me?
I said that would be one way to do it. Yeah, to get.
I think it's already been agreed upon. I think it's one of the reset planks, and I think that's how we're going to get to 2,500 gold. It's going to be part of an agreement with China. China's going to say, look, we want to double the gold price. We want to just end this crap. Let's shut down COMEX, shut down LBMA, shut down the gold trade in paper. We want to get to $2,500, $3,000 gold. We want to do it quickly. We want you on board this. So the Western banks are going to say, all right, here's what we got to do. We have to buy up quietly a lot of gold. And China and maybe even Russia will help them.
But and the gold price has been going up, quite a lot this year. So I guess is that one of the signals that this is actually already, at least stealthily happening?
It could be. It could be. But what I think also is going on with the rising gold price is we're seeing strength in gold relatively. It's a relative strength index of gold versus other asset groups. It's looking good. The stock market went down, gold went up. That didn't happen before.
Yes, it hasn't for the past few years. Yes.
Right. And we're seeing a bond rally. It could be black hole, but apart from that, apart from the whole black hole concept, the bond rally is happening while gold is lifting off its base. So gold has made a multiple point base. And maybe its time is here. I don't really focus on gold price. I focus on gold dynamics. And that's what makes me different from a lot of people. People say, Jim, have you seen what's happened with the gold price? I say, no, wake me up when it's over $1,300. I don't care about a $50 up move in a couple of days. I don't care. What I care about is the Western banks are going to make a deal with Chinese cooperation to load up on their gold reserves for their banking system in order to set the stage for doubling the gold price. And then the clowns out there are going to say, wow, look what's happening to the gold price. I wonder what's going on. That's what's going on. I look at the gold dynamics that will force movement in the gold price. So,
now I've heard that this is something, I'm no idea how true this might be, that in order to do like a full recapitalization, gold would have to be somewhere in the $8,000 announced range. Is that something that also is in the realm of possibility?
Well, sure. Let's just suppose that the banks load up with gold. China takes it to 2,500 to 3,000. And then the banks realize, okay, this is working. But the mines are not going to be able to respond quickly to produce more supply.
Yes.
Furthermore, only a small portion of the smart money in gold is going to sell. Like, I've got a couple friends who said, Jim, if we ever get to 2,500, I'm going to sell 10% of my gold. And others have said, I'm going to sell 20% of my gold. Okay, so a portion will be released.
Right.
It's not going to be sufficient to bring about an equilibrium. You need an equilibrium between supply and demand in order to get a stable price. The fundamental economics in the gold market are nowhere. You're not going to get any kind of an equilibrium for profitable operation of gold mines. You need the price to be 3,000 or 2,500 for a full year or more, because the gold mines, they just spent $1 billion on a particular site in the Northwest Territories of Canada to seal it. They're going to have to spend a lot of money to unseal it.
Right, right.
Okay, so let's just focus on the $3,000 price. Okay. It's not going to be adequate. So we're going to get up to maybe 5,000 or 7,000 just to bring about a little bit of equilibrium in the gold price. And then we move to the climax. I've been saying this all along for the last several months. Gold Standard is going to return in trade with the gold trade notes. Why? Because the emerging market nations and the Eastern nations are in control pretty much of industrial production, and they're the ones who send the full ships to Western Europe and North America to be unloaded with finished product. They're going to demand gold trade notes. Okay, then comes the banking sector. I mentioned that. Then comes the currencies. That's the climax I'm referring to. The gold currencies are going to be all over the place. They're going to be Chinese RMB. They're going to be Russian ruble. They're going to be a Nordic euro, which has got a different name of, say, the gold Deutschmark. There might be an Australian gold currency. There might be a Mexican silver currency. There might be
maybe a Gulf dinar or something.
There might be some kind of a Gulf, well, let's just call it an Arab gold dinar, because right. Libya has been pushing for this. And that's they're not in the Gulf Emirate, but the Gulf Emirates are going to become pretty much a wrecking zone soon. I think we're going to see the fall of most Arab oil monarchies. Okay, so you've got all these different areas that are going to produce gold currencies or silver currencies. It's going to produce a tremendous amount of demand, generate a tremendous amount of demand. And I think that's how we get to 10,000. You know, this is all, to some it's all silly talk. But I remember people telling me, well, Jim, you're claiming that the U.S. banking sector is going to go insolvent. This was 2005.
Right.
That's a lot of silly talk, Jim.
Yeah.
U.S. banking sector insolvent? That's ridiculous. Yeah. Well, it's reality now. So I deal in future reality with my forecasts. And what's coming is a 3 or 4 step process to get us past $10,000 gold. The climax will be gold currencies and central banks across the world loading up to fortify a competing currency with a gold backing. And the U.S. is going to come up with a fake, artificial, fraudulent gold backing. I call it the Scheisse dollar. And they have already mentioned, the U.S. government has already said, we're making preparations for the future for a gold currency backed by deep storage gold. The same fraud they've been handing us for years and years. So,
all right. Well, that's that's perhaps the silver lining or the gold lining to everything that's going on is if this return to the gold standard when it comes around, and some of these things, your forecast, they may turn out to be. The timing is impossible to predict. We seem to be closer to it than ever before, but it could be going on. This whole mess could go on for another, year, 2 years, 4 years. Who knows? So we'll just.
I don't think it can go on for 2 or 3 years.
No?
I think we're having too many breakdown elements.
All right.
The whole system. Just imagine you've got a giant stage, and you've got 4 rows of 5 pylons, 20 pylons holding up the stage. I think half the pylons are gone.
Okay. The stage is already.
We can't extend it much anymore. When they had the Fed rate hike in mid-December, that was a very desperate action.
Is that going to be reversed now, or is it that they're going to still keep on with the pretense?
I think they're going to say we're delaying the next rate hikes.
Okay.
And it'll be quite clear that they reversed.
Yes.
They're not going to tell the truth on anything.
The
last rate hike was really no rate hike, but a double barrel for QE in the Department of Treasury. So the Department of Treasury and the Exchange Stabilization Fund is now matching the Federal Reserve for QE. And I think what they're going to do is they're going to stop the rate hikes and quietly, secretly reverse the one they already did. They can't have the rate hikes because it destroys the derivative complex, it destroys the Wall Street bond carry trade, destroys a lot of things. So they gave us a mushmouth, deceptive rate hike. It's just not. You've got an inversion. Here's one of the easiest things to look at. Well, there are 2. The effective Fed funds rate. It's nowhere near a 25 basis point rise. Nowhere near. The second thing is you have an inversion between the Fed rate, officially stated Fed rate, and the 3-month Treasury bill. The 3-month Treasury bill should be higher, and it's not because they did not raise rates. Let's close on that, Desh.
All right. Well, since this is the Money War report, just before you go, 2 quick things you might just say a sentence or 2 about Turkey and Saudi Arabia and, the war angle to this whole thing. Because I hear Saudi Arabia is not going to do an armed or a ground invasion of Syria. So, things seem to be heating up in that region even more than they already are.
Well, let me just make some major quick points here. I think a NATO splinter is in progress because Europe is not going to enter a war with Russia. Turkey and Russia are now facing off. And NATO will not say to Turkey, we'll back you up. So I think we're going to see the fall of the Turkish government and their effective removal from NATO. And bear in mind, always, when it comes to Turkey, that they have major depot lines for narcotics out of the U.S.-led Afghanistan factories. Then comes the Saudis. They've got $3 to $5 trillion in treasury bonds, which is a really good reason to have them killed. That's a very heavy point. This is what fascists do. They kill the money. They kill the people they owe money to. I think the Saudis are ready to devalue their real currency, which will effectively be a statement that they're no longer part of the petrodollar. Okay, you might think, well, gee, the Saudi currency is kind of a minor thing. No, it's not a minor thing. It's a currency for the country that maintained the petrodollar linkage. And lastly, I think the U.S. government appears to have abandoned both Turkey and the Saudis. And we might be in a position now where we in Washington are making advice to Ankara, Turkey, and to Riyadh, Saudi Arabia, to go ahead and make fatal errors. because then Washington can say, Turkey made a lot of big mistakes. Saudi Arabia made a lot of big mistakes.
Like
Not our fault.
Like Saddam Hussein. Yeah. Okay.
Yep. Well, the last thing is, you want me to make a quick statement on normalization of relations with Russia?
Yeah, that's a big subject. Yes, please do.
I don't have a lot to say, but let me just point this out. Angela Merkel is really unpopular as leader of Germany right now. She is their go-to guy in a sense regarding the politicians and certain banks. But they hate her. They hate her. She's been saying everything necessary to support the Anglo-American banker party line, and she's been full support for all the Arab refugee influx, which in my opinion was a social detonation of the economic union of Europe. I'm hearing that Merkel wants to step down and become a United Nations emissary of some type. And I don't know if that would be, say, ambassador from Germany or some higher mucky-muck position in the United Nations, which China and Russia are trying to reshape. Russia and China want the United Nations to change its charter to become a prosecutor for global crime. Woo! You mean like multi-trillion-dollar bond fraud? You mean like laced viruses into vaccines? Do you mean like war crimes in Yemen? Do you mean like war crimes in Syria and Ukraine? United Nations prosecutor on global crime? Wow, that would be a massive reface of the United Nations, so big that China is building a new United Nations in China. A
Really?
new facility in China, yes. So either the New York office can get on board, or it can do what it's done the last 20 years, become part of the Anglo-American Banking Crime Center. Okay, there's more to say. France is trying to normalize its relations with Russia. The German industry is trying to normalize its relations with Russia. There have been two big deals I pointed to. One is a high-speed railroad deal done between Germany and Russia. Well, if the Russian sanctions are in place, why would the deal be done? Because the German industry is ignoring the sanctions. We're getting to some very serious levels here. The other deal I pointed to is the Nord Stream, N-O-R-D. I don't have all my facts in line. I got corrected by a couple of clients, but Nord Stream is for an undersea LNG, an undersea gas pipeline system and a seaborne LNG supply agreement between Russia and Germany. And it's not the North Sea, it's the Barents Sea that links China with Russia. I'm sorry, links Germany with Russia.
Yeah, right.
There is another, not a deal struck, but a symbolic moment. I don't know what the leaders' titles are, but the leader in the Bavarian province of Germany, his name is Seehofer. He just went to the Kremlin to try to establish some new trade lines. In other words, to set the stage for a long list of new trade deals. So the Russian sanctions are going away. It's going to get a little bit funny soon when most European member states, nations, make new deals with Russia, when the European Union commissioners continue to announce that the Russian sanctions are in place. I really hope that happens because I want to see the European Union commissioners embarrassed on the world stage. They're a bunch of fascist, nasty, nasty pedophile criminals. What goes on behind closed doors in London and Brussels would curl your ears regarding pedophiles, child sacrifices, all kinds of things. These are Satanists running the West, and my closing point is a big meeting took place between the Eastern Orthodox, call him Pope, I don't know what the name is.
Yeah, and Cuba, yeah.
No, and the Vatican.
Oh, it did, okay.
And a big deal was made. A big agreement was made. I don't know the exact details because we unwashed mere mortals are not told except through drips and drabs. But I'm hearing that some kind of a deal was made to eliminate the Satanist banker and politician influence in the West, to bring an end to big banker bond fraud, to bring an end to destruction of the Earth's environment and integrity, and to install the gold standard. Now, isn't it interesting that the Eastern Orthodox Pope, I apologize for not knowing his proper name, title, but it was Kirill.
It is called the Patriarch.
Patriarch, right, Patriarch. So the Eastern Orthodox Patriarch cut a deal with the Vatican Pope. So could it be that the Pope is a ringleader for a lot of governments, security agencies, and banks? Central banks included?
Yes,
could it
of
be?
Course.
Yes. And I'm hearing that China now has almost total control of the Vatican gold. I don't mean ownership, I mean control. Which means if the Vatican is going to disburse any, the first in line would be China. So some very big things are happening, Desh, and I'm encouraged by a lot. What I'm upset about is that the big Western elite families, like, say, Rockefeller and Rothschild, they're lower level people. And the Bush family, their lower level people are falling in line, making agreements with what I call the new sheriff in town. And that sheriff is wearing an Eastern hat. They're cutting deals. Right. They're making progress. But the holdouts are at the top of the Bush family, at the top of the Rothschild family, which controls central banks, and at the top of the Rockefeller family, which controls U.S. banks and energy firms. But the Rockefellers sold 80% of their energy assets in the last several months. So big things are coming for change. I'm discouraged that the top of the Bush, Rothschild, and Rockefeller families are not cooperating. So we still see the chemtrails.
Right.
They're not aluminum particulates. They're that and a whole lot more. Benzene and a lot of toxins.
I heard lithium is in there too.
They're designed to bring about more cancer, more Parkinson's and Alzheimer's, more infertility, and they're telling us it's because of the global warming. We're trying to cool down, some of the sun's harmful rays. What a bunch of crap.
By the way, Jim, when you're talking about the Eastern Orthodox, we're gonna finish this off in a minute. Like I mixed that up with the Russian Orthodox head, who just met with the Pope in Cuba. Okay, this was just last weekend. This couple of days ago, so that was an interesting story which I didn't really follow up, but it caught my eye. Is why is the Russian Orthodox head meeting the Pope in Cuba? But anyways, so I don't know what to make of that, but that kind of ties in with you.
I think there are a lot of things behind that, Desh. I mean, I don't have all the information, but one thing that Fidel Castro has been criticized harshly about is it's a Catholic country.
Right.
and it doesn't behave in any kind of an honorable way.
Mm.
So in the last several months, we've seen, amazingly, a rather heavy influx of Cubans into Central America. They're leaving. So Cuba is basically saying, we'll liberalize our border control. But this is all visible. What's not so visible is that Russia and China, and I don't know what role the patriarch would have in talking to Cuba and their leaders about this, but Russia and China are involved now in some multi-billion-dollar development deals in Cuba. One of them that I like to point to, it's my favorite, is the one in the port of Mariel. Remember in the 90s there was the Mariel boat people where a couple hundred violent criminals were dumped on the Florida shores. Okay, Mariel is a port. And the Russians have promised to build a huge air terminal commercial set of warehouses. They want trade with Cuba. But that's not the biggest element in the Cuban deals. It's the multi-billion-dollar projects for offshore oil and gas. Now, Cuba, many people might not know this, but Cuba it is 1,000 miles long.
Yeah, it's a big island, yes.
Okay, it's not a very big island in terms of square miles, square kilometers, but it's got 1,000-mile coastline on each side.
Yes.
So on the Atlantic side, there are some already big discoveries of oil and gas deposits. And the Russians and Chinese are going to develop it. Do you think that's going to mean some big jobs for the Cuban people?
Of course.
Yeah. Do you think it's going to mean a lot of influx of money into the Cuban economy?
Yes.
Yeah. Do you think it's going to result in a naval base for Russia? Yeah. Do you think the United States government likes that?
No.
Okay, so we got some big things coming to Cuba. I think this is going to be the Cuban Renaissance. And they're going to shed their communist crap. It's going to take time. Don't go sending me emails saying, oh, Jim, what a naive thing to say. It might take 15 years.
I think Havana could be just a beautiful city. It's like I was there once visiting, and it's very run down now, but man, it could be magnificent.
Yeah, just shove in like $2 or $3 billion a year in development. Before you know it, you might have some shiny new buildings and renovation of a lot of building. I have a friend who went there and he said, Jim, I couldn't believe how many incomplete renovation projects there were.
Their architecture is beautiful. I wouldn't build any modern ones. I would just, revitalize it.
Right, but here's my point. My friend said, I went through Havana for 3 or 4 days. I saw about 15 different buildings undergoing renovation, but nothing happening. They're low on funds to complete the renovation. So the offshore energy projects with Russia and China might be exactly what they need to get this thing going again. But, a nation that has a wage scale of $25 to $30 a month, they got a long way to go to make progress. Yeah. So it's not going to be 2 or 3 years. It might not even be 8 or 10. It's going to take longer. Fidel has raped and pillaged the country. I've got some European connections who've told me that Fidel and his gang, it's a criminal organization that is running the Cuban government.
Right.
They own Swiss bank accounts worth close to $10 billion.
Not surprising.
It's not a huge sum, but the people of Cuba, I think would really like to see that dispersed. What is their population? About 10 million?
I'm not sure.
Okay, just for argument's sake, if it's 10 million and they've got 10 billion
Yes.
in Swiss banks, then, it's kind of cavalier to say, well, put the crooks out on the street and get them out of office and distribute the money. But, if you could, in a fairy tale sense, you're talking about $1,000 for every man, woman, and child in Cuba.
Right.
For $25, $30 a month, I'm not making this up. It's not $20 or $30 a day or a week. It's per month.
Oh yeah, it's very poor. I've seen that myself. I've been to Cuba a couple of times, and yeah, it's a very poverty-stricken place. It's almost like Haiti in a sense.
I was just going to say, the only country that compares is Haiti. I got a couple friends who say, I went there, Jim, and it's kind of funny. You order on a menu in a Havana restaurant, and it says you get a few chicken strips and vegetables.
Right.
But the vegetable might be potato. They give you what they have.
Oh yeah, right.
The shortages are acute.
Yes, they are.
It's bad. It's really bad. So here's another angle to close on regarding the Russian-Cuban deal. Suppose the loan that Russia made, a development loan they made to Cuba, suppose Cuba defaults on it right away. What's the consequence? The Mariel port converts to a Russian naval base.
So we could have another Cuban Missile port crisis, you could say?
Nah. Just more development of Cuba and more isolation of the United States.
Okay, well,
we're going to see Chinese naval bases in Nicaragua and Venezuela soon. They're unstoppable.
Well, we've talked about U.S. isolation in the past, so there's no point in going back there. But again, this confirms what you're saying here in regards to Cuba and Latin America. It confirms that those topics which we covered in the past, that it is again something that is happening. The king dollar is being dethroned. All those things are happening, but they're happening faster than ever before. So the quickening, as you put it, is certainly taking place. And therefore, on that note, Jim, what I would like you to do is please give out your website, your contact information, and tell listeners about your hat trick letter, which is, again, it's like almost encyclopedic in the amount of information it contains and is highly recommended.
Okay, the website is www.goldenjackass.com. No hyphens or anything unusual in there. I've got a free web page. I just cleaned it up a little bit. And it's got a bunch of links since last July of new articles, public articles, and new interviews like this. So the links are there. I tend not to repeat an interview with someone if there was no link provided for clients and followers. So, that's my little element to service out there. But the public web page has a lot of material there. And some people have told me, Jim, I download your interview, and it's really great because I walk the beach or I walk in the park or I listen to it on my long commute to work. That's nice to hear. Okay, so it's a way of occupying your time learning. So if you're new to this, bring yourself up to speed a little bit by looking at some of the past articles and listening to some of the interviews. But sign up for the newsletter. There are 2 parts to the newsletter each month. There's some months I just have one, but there's so much happening. It's pretty hard now not to have 2 reports, because one report is the money war report. That's basically the defense of the dollar, the defense of the dollar system. The second report is the gold and currency report, which is basically about all the different elements of gold and silver and currency, central banks, getting their policy and all the inflation and all the emerging markets. And I focus on Russia and China primarily in the gold and currency report because they're leading the charge against the dollar. They're trying to do the de-dollarization. So the two reports are out there every month. It's part of the Hat Trick Letter, a subscription service. And this April will be 12 years, Dash.
Well, congratulations.
So it's been a long ride, and I admit to getting a little bit exhausted, but fortunately I can get my jets recharged, chase a skirt or two, take a bike ride, grab some sun, and you people up there in Canada and northern parts of the United States, you can eat your heart out because we got low 70s, pure sun, and just a mild breeze to make sure you don't sweat much.
We are only around zero. I mean, that's like, 75, 80 degree difference in temperature? That's not much, Jim.
No, it's not. And, I invite you to come on down and support the Costa Rican economy.
I would love to.
I would love to become the economics minister of Costa Rica.
That's good.
Never going to happen.
Yeah,
I just met a fellow who's a PhD economist from a university here in Costa Rica, and we're going to have some conversations and maybe a lunch.
Maybe you'll teach him how to do some
real
profit.
Maybe I will listen carefully and not spout too much. This is my home.
Right. Okay, I hear you.
Okay, yeah. I want to learn what he's going to tell me about economic policy here, and I'm going to make some little comments about the dollar and troubles and economy and this and hope for the best. I want him to walk away thinking I'm just another gringo who really doesn't know much about what's going on.
Well,
that's my objective.
Costa Rica's come a long way in its tourist business. They've really developed it, and they continue to develop. So I mean, that's something which is, good. I think it'll be beneficial to their economy over the long term.
Well, this has always been a big tourist economy. They call it eco tours because they do tours of the jungle, tours of the beach. They do a lot of things here. I just read a newspaper article that showed in the last 10 years, manufacturing went from 23 to 15%. That's not a good sign.
No.
It's not. So we've got more on the eco tours.
Right.
More on tourism. And, they have some events recently where Intel decided to leave. That's the largest employer of all Costa Rican industry. But they're trying to rework a deal. Has to do with electricity provision. They're trying to work a deal. And I think what happened was Intel said, we're going to leave unless you alter this electricity arrangement. They've got a complex 5-tier system here for electricity costs. And I have found that I'm on the second highest where I live. And I used to be on the first highest because I was in a more luxurious neighborhood. If you want to be on the lowest zone for electricity costs, you've got to live in the barrio, in the poor areas where it's a little more dangerous. Just leave it at that. And I know some people who live in the barrios, and I say, "What's your electric bill?" And they say, "Oh, it's about $6 a month." Well, mine's about, 25, 22, 28. So it's a big difference.
All right.
Anyway,
on that
good to be on, Desh, and I appreciate having me.
I appreciate you coming on, Jim.
All right. Well, good luck to everybody, and try not to freeze your bonubis.
Okay, you two go and enjoy your sunny Costa Rica weather that you're rubbing in. I applaud you.
It's not real hot. I don't want to give people the impression that you walk outside and you bake. No, it's 75 and breezy.
That's wonderful.
But I'm looking at the sky, and there are only a few clouds, and the sun is very, very nice.
Yeah, that's a good temperature, 75. I love that range. It gets into
I
the
like
80s.
to describe it as February in Florida.
Yes, you're right. Well, thank you very much, Jim, and I appreciate you taking the time. I appreciate you talking to my audience, and again, you have provided a wealth of information. Now we'll probably get together again in end of March, early April or something, and by then I'm sure a lot of more fireworks and fuses will have been lit, and it'll be interesting to catch up and see how your forecasts are coming true.
Okay, well, it's a pleasure being on, Desh, and we'll talk soon. Bye now.
Bye.